All right, good morning, ladies and gentlemen. Welcome to this week's edition of the Investing Systems Trading Service live show. I was just thinking this morning, watching the early price action here in the first half hour, that I really like the fact that instead of doing it right at the market open, doing this show right at the market open like I used to do, year over the past few years, over the past many years actually. It's kind of nice to wait until we get a little bit of trading underway so that can get a little bit of a better feel for what's going on in the market. And today's a pretty good example. So let me dive right in here and look at this 5-minute chart of the S&P here this morning. All right. Started off, the futures were a little bit higher, and there was a little bit of a gap up, right? And so it looked like everything was going to be just fine. And then, after the very first 5 minutes of trading today, right? Get this little sort of poke higher, little gap up and poke higher. And then literally since the very start of the day here, been getting a pretty decent follow-on sell-off to yesterday. And boy, this right now, wow, is there some sort of breaking news here? Right now, we're getting a pretty decent little sell-off here. So kind of interesting. Yesterday was the same way. That's what was the most interesting. Now, yesterday we had the gap up, right? You can see here, and for like the first 30 minutes, the market rallied, and that was a little bit of a, I guess you'd call a bull trap, right? Market rallies for a little bit. Looks like everything's going to be good, and then, if I'm not mistaken, yesterday was one of the worst days we've had in a while, right? And so let's go back and look at waiting for my chart to come on here. Sometimes these charts act funky early in the day. Maybe try a different ticker symbol. Huh, that's weird. All of a sudden, my chart's acting all flaky. It'll come back on in a second, hopefully. Huh, weird. Very strange. Let's try a ticker symbol here. I wonder if I'm going to need to refresh my charts. Let me just try that. Why not? Can't hurt. Maybe, just maybe, free stock charts went down here. In which case, that's not going to be good, because I was going to go over a whole bunch of. I was going to go over some of the open trades and that type of thing. Huh? Very strange. Very strange. It just kind of. It looks like maybe the charting platform went down. So, I should actually. I should actually have some sort of. Oh, there we go. Free stock charts. That's the problem. Well, that's going to make for a lousy show. I guess what I'll have to do is, huh. Yeah, I have my Thinkorswim platform on a totally different computer, so that's not an option. Let's see. What could we use for what could we use for Plan B? There's not too many. I guess I could use stockcharts.com. Use that occasionally. So let me see here. Let me open up a new browser, and just give me a second here. Oh, by the way, I could put something else on the screen while I'm doing this. What I was going to do is I was going to go down this list here of open trades and just take a look and see where some of these things are. Look at the trailing stops, that type of thing. Oh, look at that! What a wild open this morning. Got kind of a spike low there, and I mean, big spike low, and then recovery back up. Yeah, looking a little bit rough. So there's breaking news all over the place, and very much of a news-driven sort of market here too, right? I mean, all it takes is I'm gonna get a chart up here in a second. So just give me 2 seconds here. All right, here we go. Okay, so here's my backup. Let me get this on the screen here. There we go. What I should probably do here, and just give me a second to configure this thing. I'm going to I'm going to get rid of this stuff down at the bottom here. No RSI, no MACD, no stochastics. Just make the chart look a little bit cleaner here. Put some extra bars on there. Let's see what this looks like. Yeah, now we're getting somewhere. That's a little bit of a cleaner chart. I still got a couple of moving averages on there. Yeah, crazy sort of open this morning. Decent little sell-off. Let's see. So at the open, the S&P was a little bit over 2970, and then it dropped about 2955, 20, a little lower than that. So, interesting. Yeah, so we had a big long range day down yesterday, and that was sort of a little bit different than what we've seen lately. Now, remember last week I was talking about the Fed meeting, right? I was talking about how, here was the prior Fed meeting right here, and we got a big sell-off that day. And what we can't see on the chart, and see, this is one of the things that sort of that sort of makes it a little bit. Let me go with 1 year and 2 months. Makes it a little bit of a hassle here to use these free stock charts. Is so back over here, right? Was the September Fed meeting, and the market had hit an all-time high, and then you had the September Fed meeting where they actually raised rates. And so this was like the September Fed meeting 1 year ago. And then you had a few days where the market seemed to be fine, and then you had like one or two sort of sell-off days here, and then all hell broke loose, right? On especially on this day. And so you got something, kind of setting up a little bit similar, very similar pattern, right? So look at this little area here, and look at that 50-day moving average. And then look at this little area here, and then look at how the price, pulled right back to the 50-day moving average. And there's a few days. Well, there was a few days after the Fed meeting, and then a few days after that, where the market just seemed like it was having a little sort of a pullback. But this little area right here, kind of similar to what we're seeing now. And so, I mean, there's a lot of news out there that's really driving the market right now. Now all of a sudden they're talking about impeachment, and the funny thing is the market didn't really seem to care about that much. I mean, got a little bit of a sell off on that yesterday, but there was a few things happening, and one of them was consumer confidence. Just for the fun of it, I'm going to try free stock charts again. There we go. Because I was going to say it's going to be painful to try and there we go. We're back. Thank goodness. All right. So much for I guess I'll leave that stock chart up just in case. All right. So, yeah, I'll tell you what. I mean, the free stock charts is I've been using this thing for so many years now. It's just so much easier to actually to zoom in and out, manipulate, mark up, do all sorts of things too, right? I roll my mouse and it zooms out like this, so much easier to work with, in my opinion. Anyway, so might be able to see a little bit better on on this particular chart what I was talking about there. The September Fed meeting, whoops, price action leading up to around the September Fed meeting. Now, I don't. Let me go ahead and put, just for the fun of it. Let me put a 50 moving average on here, right? Let me just change this to 50 simple moving average, because that seems to be like sort of the reference point as far as moving averages go right now. So here's what I was talking about. Like, market ran up prior to the Fed meeting last year, and then you had, like, I have it circled here. And then you had like 5 trading days where everything just sort of, seemed normal, bounced around. And then you kind of sold down here to the 50-day moving average, and just a little dip, and then that one big long range day sort of changed everything. And I remember this craziness, this zigging and zagging, big big subsequent sell off and rally, and then of course we know what happened at the end of the year. So anyway, I've been pointing out that Fed meeting sell off. Fed meeting sell off, and there's a couple in between here that I don't have marked because they really didn't nothing really happened afterwards. But you can see that the prior 3 Fed meetings here, you had sell-offs after that, and so you can never assume that it's going to do the same thing. But zoom in on the price action here, and so there's a few things going on. One of which is, when we look at this weekly chart, um, a particular trend line over the highs, goes back to the end of January 2018, and that's literally been containing all the price action, right? So the first sign of a real breakout, and this, when I look at this little pattern here on the daily, it kind of has the look of a little bit of an inverse head and shoulders potentially, right? But anyway, until the market, until and unless the market can actually like bust out of that, it's not likely to go on, a huge big run higher. The funny thing about a rising trend line like that, and I see a lot of people out there that also have, they have this drawn as like a big wedge, right? And so, I mean, the lower part of the wedge like goes off the screen practically. But there you go. Testing the lower part of this wedge would be something, right? I mean, it would take pretty much of a cataclysmic sort of sell off like we had, at the end of last year to do something like that. And so it's a funny thing about, did I say wedge? This is a megaphone, right? This is what you'd call a megaphone pattern. So I see a lot of people out there that have this bottom drawn on here. I don't have it drawn on mine because I am mostly concerned with this overhead resistance. And the funny thing about this overhead resistance is that the market can rally, 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 and still not break through that, right? Like, we could have just a little dip here, and then we could rally up to new all time highs, but still be within that. And so that's just one thing to keep an eye on. Like, if we're gonna get a real bust out, like a real breakout, people calling for a melt up. There's a lot of I'm sure you've heard a lot of people say that, hey, the market doesn't these bull markets don't die of old age. They typically end with like melt ups and everybody bullish in that. And so you never want to rule anything out, right? A lot of people think that, hey, we get a little bit of a sell off here, and then that sets us up for a big year end rally. Now, of course, you have to keep an open mind, because the same people, the same people that were calling for a year end rally last year, will be calling for it again. But here's the thing: is this sucker sold like at the very end of the year, from the beginning of December, right? There's like, let's see, there's December 1st last year, right? There's December 1st. And so I remember in particular one very familiar gentleman on CNBC was calling for a 10% year-end rally, right? And then what did the market do? I mean, the very last 4 weeks of the year, or actually up till Christmas Eve was the turnaround, right? But I mean, that was the opposite of a 10% rally, and so anytime that but here's the thing: the market does typically the around the holidays, November and December are strong months. September and October. September is usually the weakest month, and so you know this year it's kind of bucked the trend. August was kind of a weak month, but September's kind of bucked the trend here, right? It's been sort of dull, and here's the other thing I was getting ready to talk about is under the surface, right? Things aren't nearly as rosy as the S&P being a couple of percent off an all-time high. There's been a dramatic shift in a lot of those the software stocks, the real super high momentum stocks, the FANG stocks, right, have really gotten hit hard, and so the S&P is kind of masking a lot of damage, I would say. Let's look at the IWM. The IWM has its own little sort of megaphone pattern going on within the context of. And see, here's where what I was talking about the overhead resistance on the S&P. This comes in real well on the Russell, because you can go back like 9 years on the Russell, and that particular trend line has contained the price action, and the Russell's got a long way to go to hit a new high, right? And it doesn't look like it wants to rally up and hit a new high. So obviously that means that the smaller stocks are not participating as well, and it's sort of a sign. It's like a divergence sign. It's like the transports, right? The Dow transports. I mean, look at this. They peaked. The Dow transports peaked like a year ago, right? And so, the old Dow theory is that you want to see the Dow Jones and the transports both hitting new highs, and so that's kind of another small divergence in the market. Transports have just been sort of zigzagging here sideways. Let's look at the financials too, real quick. The financials. I mean, this is. I saw something the other day. This is potentially a bullish pattern, but again, the financials peaked back here on that big run up into the end of January 2018, and so that's a long time ago, right? I mean, this is a weekly chart, obviously, and that was a long time ago. And the funny thing was that for the year of 2018, financials were like one of the favorite sectors. I mean, everybody loved the financials for 2018. That was the number one sector for like 10 out of the 12 Barron's Roundtable um, professionals. Every year they have the Barron's Roundtable, what to expect for the next year, and their top picks and all this. And so, all the big Wall Street firms had financials as their favorite sector for 2018. So, just shows you what can go wrong. But anyway, what I was leading up to was that I saw somewhere yesterday that said, in a real bull market, in a real strong market where the financials hit new highs. The financials confirm. So it's kind of like, it's like the financials and the transports. And I don't know if look at the Dow here. The Dow's got kind of a double top sort of thing going on here on the weekly chart. I don't know if the Dow, and a lot of people, myself included, kind of in the camp where the Dow itself is not really representative of the overall market. Although it has it has a fairly amazing correlation, even though it's so few stocks. Right, it has a pretty amazing correlation to the S&P over the longer term. But the funny thing is that the Dow, they obviously they kick out the losers and add new companies, right? Look at this. Um, I wish I had marked this. I can't remember. They added Walgreens to the Dow, and maybe they should have picked something else. They kicked GE out of the Dow, which was probably a good move, and they added Walgreens. But I mean, look at Walgreens, man. This is like 2014 back here, right? And so you go back and 2014, you had sort of this pullback and consolidation in that, and then look at this. It was a big support line that got broken here. This is a pretty nasty looking chart, to be honest with you. Right? This is not a good looking chart at all. So, but anyway, so now Walgreens is in the Dow, and over the years, I mean, I've been doing this. I remember when they added Microsoft and Intel to the Dow. So, anyhow, let's take a look around at a few other sectors, and then we'll get into some of the some of the actual trades that we have open now. There's the industrials, kind of chopping around, chopping around. Here's one thing and I'm going to leave this 50-day on here for a little bit, just because the 50-day moving average seems to be sort of a decent reference point at this point. Here's the industrials. There you go. Last September, same sort of thing. Fed announcement, little chopping around, right above the 50-day, and then boom, busted below the 50-day. Kind of interesting and of course, the 50-day is just going sideways here. But here's the important thing to notice about this is that the Dow Industrials. Look at these peaks. Look at where these peaks were, right? And think about that. I mean, let's see if I can even draw a trend line across these highs. So, when they talk about the market being right up at the highs, now, here's the thing. The industrials are probably, a few percent. They're probably only a few percent from the all-time high. But I mean, the all-time high was in January 2018, right? And so it's like the financials, January 2018. And so I mean, that's a long time to go with basically, not making new highs. So technology is different. This is a 2-year chart, by the way. When I zoom out this daily chart as far as it can go, it turns into 2 years. So technology's been the place to be, obviously, and of course, that was a massive sell-off right there, over 20%, I believe. So the S&P had a 20% pull up or pullback last year, and so anyways, let's look at semiconductors, kind of an important sector. They sort of hit a couple of new all-time highs here. So anyway, so let's go back to we looked at the Dow and the S&P. Oh, the Nasdaq. That's what I wanted to look at was the Qs here. So yeah, I mean, the Nasdaq's been sort of the real leader here. Okay, but here's the thing about the pattern on the S&P, and I don't want to mess my chart up too much, draw too much stuff. So I should probably just use the SPY. Thing about SPY is when we had like quadruple witching last Friday, right? You had like the dividend comes out and it kind of skews the price a little bit, but theoretically you could look at this in the context of an inverse head and shoulders, right? There's the left shoulder, there's the head, there's the right shoulder. And so that's kind of what I see on the chart. Now, I do sort of see like these two humps, obviously, right? So there's a point here where here where I'm not sure how far that we'd have to pull back here to sort of negate that. But I'll tell you what, if and when it does actually break out of here, then I'm not real big into measured moves or whatever, but you could probably take like this distance right here, this distance right there, prior to the inverse head and shoulders, and you could probably add that to the breakout, right? I don't know. Seems kind of crazy, but a lot can be done with sort of manipulating charts. Here's a good one. This is always a fun one because I see people that squeeze their charts up like that, right? I mean, you could squish your chart up like this. You know what? I'm gonna take this 50 off of here because it's bugging me. You could squish your chart up a little bit like that and say, hey, this thing's just like coiling up, right? And when it breaks over there, boom, it's off to the races. And so, never rule that out. But it's just funny because a lot can be done. The other thing I was going to say is like I have this monthly chart. On my monthly chart, I actually have log scale instead of linear, right? It adds a little bit of a different dimension to it. And looking at a real super long term chart, a lot of people like to use log charts. Kind of makes more sense. Gives it a totally different view. So check it out. There's log and then there's linear or arithmetic. So just for the perspective, I like to use a log chart on the monthly. So anyway, let's jump in here and look at let's look at some of the trades we got going here. I noticed that the CHRS, which is a biotech stock, has been particularly strong, and I know one of the members has asked me a couple of times about this, and so that's why I wanted to bring this up and just talk about it for a minute. So this is a real sort of good looking chart. We had a trade going in it a while back here, and it worked out really well. And then there was this one day. I mean, you can see there was like the trigger price back here and trailing stops, and it just blasted through the target, kept going, and that stop. I probably don't have all the stops marked on here from the last time, like I do this time, right? So there was, I mean, sometimes they're so minor of an increase in the stop that it's easier to just drag one of these higher and mark it with a new price. But there was that one day, and I don't even remember what this was, that literally like took it out. It was obviously, with these biotech stocks, you always you always have the risk of something like that. So anyway, but I mean, good looking chart here. So we got a very similar pattern happening now to what went on back over here, right? You had a pullback and then sort of a pop and a big consolidation, and this is a volatile stock. I mean, the range, I forget what the average range on this was, but when it was on the pending list, it would have showed you that. So anyway, extremely volatile daily ranges, but same sort of thing happening where you had sort of a pop and then a consolidation for a while and then another level higher. And so then we just had another sell off, another similar sort of consolidation. It was a little bit more orderly than this, but and here's the thing, the stop initially started off like right down below the pivot low, and then literally like within a day, moved up a little bit, and within a couple of days, it was already like right up sort of underneath the lows of the consolidation. So it's one thing to keep in mind when you see an initial stop, and it seems like way far away or like way too low. Keep in mind that generally speaking, within 1 or 2 days, that thing's gonna come right up, and within a and you can see it on this one, right? I mean, the trigger was on the close like this day right here, like right up there, and so like the following day, it actually opened and traded just barely over the trigger. Let's see, the open that day was 2069. The trigger was 2070. So in theory, you can see how it pulled back there. And so the idea on something like this is that if you had just used like this, if you had used this prior low as the stop initially, you could have theoretically you'd have just got knocked out the very first day, and you'd have been like, oh, this is terrible. I think that would have been like the last thing you'd wanted to do. So anyway, long story short, the system is going to calculate the initial stop. Um, Sometimes it's near the bottom of the and it just depends. Like when we go through some of these, I'll show you all sorts of different sort of variations. It's not always at the bottom of the pattern. Sometimes it's actually below some congestion, below some lows. Sometimes it's not, but it's based obviously, like we always talk about, on the average range of the stock. And so anyway, so you can see why, given this thing enough wiggle room to actually sort of work itself out, is the ticket here, was the ticket, right? And so my guess is, and that stop's been sort of creeping up here, and one of the reasons is because of the intraday volatility on this. I mean, you can see these ranges are just like up, down, huge. Now the stock's starting to get some momentum to the upside, and so this trailing stop will, creep up probably at the end of today. It'll be, well, it's hard to tell where it's going to be, but it's still going to be, far enough below these lows to allow for normal sort of price fluctuation. But anyway, now that it's hitting the target, I mean, the reason that we have targets, right? I mean, the idea is that the reason that there's a target is because that's where the system is calculated is a likely place for the price to go if it does actually get some traction to the upside. And so we've seen there's a lot of stocks in the past, and there's a couple we have open now that have just absolutely blasted through the target and not looked back. And so that's why we recommend that selling half at the target. You can sell. There's really a few different ways to do it, but one is sell all of it at the target and just move on to the next one. But the problem with that is that a lot of times you're going to shortchange yourself, right? Like if you just had a limit order in today to sell all of it at the target, you had a good trade. I mean, there's no question in that. But the thing of it is that there's more that can probably be squeezed out of this, and so besides, and it just depends too. I mean, there's certain stocks where it's almost by the time that they reach the target, it's been enough time or struggle or whatever that probably just not a bad idea. Go ahead and sell at the target and move on. And so each case is going to be a little bit different. In this case, though, I would literally suggest, like, at this point, and I don't know, like, tonight maybe a parabolic stop will kick in just below this low, but typically when if a stock makes a big sort of parabolic move, and I'm not sure that we could call this a parabolic move yet. It just depends, but typically what happens is a parabolic, like a P stop, will show up like after the update. And I'm just gonna put this on here. I'm not gonna actually mark it, but generally speaking, when you get a parabolic move when the system detects a parabolic move. We got a couple of stocks right now that do have P stops on them, but the P stop would go, somewhere just below the low of the day that it kind of went parabolic and got extended. And so at this juncture here, there's a couple things to do. Sell half at the target, let the rest ride with a stop loss at, either the target or the parabolic stop if it kicks in. Basically under this situation, you would not, like this trailing stop may move up to 2050 tonight, or 20 and a quarter, 2050. It just depends. It's designed to trail far enough behind to allow for a lot of normal zigzag up and down price fluctuation. But in real life, and see, that's why, generally speaking, in real life trading, using just the kind of stuff that we always talk about here, and the normal sort of common sense, you're going to do a lot better than what the stats may actually reflect, right? Because you get cases like this where the stock will, and we have one like this right now, one of the open trades where the stock has gone up, hit the target, and started coming back down, and the trailing stop is like just barely at break even right now. And so, if you had sold part of it or all of it, or protected it somewhere around the target, so you'd be doing a lot better than doing a lot better than what the system's going to show on something like that. So anyway, I wanted to, this was the one I was sort of focused on today, because it was really sort of on the verge of making this kind of move here, right? And so, and the funny thing was, as nasty as the market was yesterday, this thing was strong, right? Generally speaking, if you were looking around at different stocks yesterday, it was pretty nasty. So let me start. Let me start with this ABG here. I generally go in, look at the open trades, and sort them by sort them by the price gain. And the funny thing is that much of the time, the biggest percent gainers are the ones that have been open for the longest, because it's the old cut your losers short and let your winners run, right? I don't even know what Asbury Automotive does, to tell you the truth. But anyway, I've been sort of managing the stop on this one, trailing it up. There's where the P stop kicked in, and so in theory, you would have, you'd have wanted to sell half of it, maybe protect it at the target, um, and or the parabolic stop. And so chances are, but see, here's what's interesting about this. And so while the system, everything's calculated and it's all math and technical analysis and all this, the way that one can actually in real life trade along with the system is very flexible. And it was kind of, that's kind of the perfect sort of happy medium, is you got a rigid system where all the details and parameters and everything are calculated, but within that context, you as an individual have all sorts of flexibility. And so this is a great example of what I was just talking about. The trailing stop is designed to allow for like a normal pullback like this, right? And so this trailing stop, was down here at 95. You had that sort of a parabolic move, and then a little bit of a pullback, but this trailing stop, right, or this T stop, did not get hit, and so this is still an open trade, even though in theory, um, unless you were like on vacation or something like that, you'd have probably, somewhere between 97 and 99 and a quarter, where you'd wanted to get out. But anyway, this thing's still open, and so there's the potential here for this thing to bust out and make another one of these runs. So this is just a perfect example. Oh, and so by the way, like this particular trailing stop, um, it wasn't really based on this. It wasn't based on the low of this candle. It was there. It would have been there prior to that. So allowing just enough room for that sort of pullback and then move. Now, of course, there's going to be times where it actually pokes through it and then does this. So, but that's just sort of, the trailing stops designed to sort of hang back far enough so that it can stay in through normal volatility. This KL, there's a couple of gold stocks, two gold stocks and GDX, which obviously today are having kind of rough days, but yeah, this one had been sort of off to the races here, right? Sort of off to the races. It's kind of this thing likes to act strong when the market's weak and vice versa, right? If the and so, but these gold stocks have you can see that this has really been a nice strong stock. It seems like the zigzags on this, the volatility have just been incredible, and so I mean, you never know. I mean, obviously, it wouldn't be a good thing for this to stall out here and to come back down. But the trailing stop, basically come up to break even or whatever. So we'll see what happens. Sometimes I see this a lot. Early in the day, you get a big sell down like this in a particular stock or even the market, and then later in the day it rallies up, and so you got like a little low, and then the close could be like way up towards the upper end of the range, and then the following day, boom, you get a pop. So kind of like what happened over here. Well, this was actually this looked like a pivot high, but then it rallied up and made another high. So you just never know. You get sort of normal pullbacks, but the end of the run is not necessarily over. This one is actually, tended to make higher highs on each one of these, like sort of. This one was weird. I don't know what this was about, but this particular stock, I mean, it's got a series of higher highs all along, and so theoretically, like on this upswing here, it should make a higher high. We'll just have to see. SEDG, this is one that we talked about a couple weeks ago, talked about it last week, looking pretty good. It was a beauty because of, the real nice sort of pattern with this trend line break. And you can see that, you can see how it, triggered and then basically like had that big long range day all the way up to the target. And it's been just sort of waffling around here. Yeah, this is one of the cases where today it seems to be holding its own a little bit, but this could be one of the cases where in theory, the stock hit the target and then pulls and then can't get anything else going and pulls all the way back and gets stopped out like literally at break even, right? Even though in real life you'd have maybe pulled some off at the target. So anyway, so far so good on this. Extremely volatile stock. Thing about these volatile stocks like this, and I forget what the range was on this, but that's one of the things that I suggest that you use is if you like trading these volatile stocks, chances are that they're gonna make their moves pretty quick. And some of the other stocks, let's see. So we already went over this. I'm just going down the list here. GDX, yeah, GDX, same sort of thing. It's still on the upswing, and still on the upswing here. But today, it's had a pretty good run up, and so it's having a little bit of a fold over. The stop on GDX was kind of interesting. I expect today, like after the update, to move up, somewhere in the neighborhood 27.80, $28, somewhere up here a little bit. So it's just slowly starting to creep up. But anyway, I mean, you can see over here, same sort of thing. Just a slow sort of creep up on the trailing stop. So it's on the upswing this time still, and same thing. Series of higher highs, and interestingly enough, the target the target's a little bit lower than all this, so it doesn't actually have to make a new high to hit the target. So, and then of course Apple. Apple's a really good example. This is crazy because the stop had made it all the way up to 217 here, right? And then yesterday's low was 217.19, and today's low 217.14. And so, there's another sort of example of how, that stop. And I mean, obviously, it could have just as easily ticked down this morning and hit that stop, but it didn't. I mean, literally on a $200 stock, to come within, 20 cents of hitting the stop, a few times here. So just tells me that the stop is calculated pretty well. So anyway, yeah, Apple looking pretty good here. You can see the progression of the trailing stops. You can see, there was this is a good example of why, selling at the parabolic, or taking it the parabolic stop, and or the target or the parabolic stop is not a bad idea to lock in your profits there. So anyway, still in Apple, still riding this current uptrend, and the idea is to sort of stay in as long as the momentum and the upswing are intact. So AEM just triggered here recently, and it's another gold stock, another gold mining stock. Really nice sort of pattern here. Um, Big trend higher, nice pullback, and then sort of a cup forming, right? So it'll be interesting. This one's not really as strong as KL, but it's trying. It's trying, and so if we get some follow through on that target looks reasonable. This Expedia. I think we looked at this one last week and the week before. Here's a real good example of why selling at the target makes a lot of sense. And so the idea is like always sell some or all at the target, right? And you can decide on certain trades. You can decide to sell it. Like this one was kind of a struggle, right? This is kind of a struggle here, and so when this thing poked at the target, just kind of looking at this chart here, and here's the thing: is like longer term, like down the road, this could turn into a big giant cup, and come back up here towards the actual high, but all of this sort of zigzagging and up and down, and it's been sort of a struggle for this. And so anyway, by the time it hit that target, it might not have been a bad idea to just take all of it. But anyway, still in sort of a no lose situation, right? Because if you sold half at the target, and now this trailing stop is up here well, let's see, make sure I got this right. Yeah, 131, which is basically break even, right? Basically break even on this. So that's sort of the trick right there. Is we want to get on the ones that just sort of keep going and ride them as long as the momentum stays. And there was one I'm trying to think. Oh, it was this one. This one's closed now. This JEC, but this was a pretty good example of one that made it pretty far past the target. Now there was some parabolic stops that got hit or whatever, but in the past we've seen some that just that go well beyond the target, and so it's always not a bad idea to consider sticking with a partial position. See, the thing of it is that if you sell it all at the target, and it continues higher and continues higher, then you start second guessing yourself, and you're like, oh, what I should have done is, like, let it get past the target and then put a stop at the target. See, that's kind of valid too, right? These couple days right here, you'd have been kind of nervous about what was going to happen, but at this point, like this day here, all you'd had to do is put your stop like down at the target and stick with it. And theoretically, I mean, and that's where I talk about flexibility. I mean, theoretically, you could still be holding this stock with a stop at the target, right? And so that's just where, a bit of discretion comes in. There's lots of different ways to play it, but the system itself, I mean, it doesn't know what you're doing, or, it doesn't know anything about, what the stock's going to do. It's just calculating all this stuff based on the prior price action and a bunch of different technicals and that type of thing. And so, theoretically, if a stock like blows through the target, then like this one here, having the stop like right now at the target, completely viable, right? Completely viable. So anyway, let's move on here. Um, go back to the open trades here, and just I'm gonna go through these real quick here. There's some new ones on here. Let's see, ZTS got a pretty decent little upswing, kind of consolidating here above the trigger. But this is a pretty good example of what I was talking about earlier. The initial stop, like way down here below the low of the pattern. And basically, the reason that stop probably started off here is a function of these huge long ranges, because we use a monthly ATR. And so, like if you go back just a month and you calculate the ATR based on like these ranges, it's going to be huge. And so, with that trigger right there, instead of just saying, oh, we're just going to put the stop, one tick below, or a penny below the pivot low there, or whatever, it's calculating that based on the monthly ATR, and that's why it starts off. But I mean, literally within 2 days, it's all the way up here, just a buck under the trigger price, right? And so my guess is even with the price coming down here, this is probably not, I can't say for sure, but probably will even tick up a little bit more, after the update today. So see, ice is kind of this is kind of a weird one. I wasn't a huge fan of this one to begin with, as you guys recall, simply because of the way that it just tanked, and then the way that it had, that huge crazy spike up day and closed over here. So I wasn't a big fan of this, but it seems to be consolidating okay above the trigger price here. But you can see how that stop is like coming up, and so I mean, right now, 50 cents on a $90 stock is that's not giving it much. That's not giving it much leeway on the downside. But you can see how that trailing stops come up real super quick. So let's take a look at this is the new one for today. Right, here you go, Hershey. Hershey is just triggering in today, and you can see it gapped up a little bit, trading right at literally trading right at the trigger price here today. So, and so, here's an example of one where the initial stop is not down below the low of the pattern, which is, and then quite frankly, I mean, I don't know how the system decides. It just calculates it based off the formulas that Jeffrey has programmed in there. And so keep in mind that the initial stop's not always going to be down below like the most recent low. And so my guess is that it had something to do with the way that this one triggered in, right? And I mean the trigger looks completely sort of, it looks just about right. The idea, right? I mean, our basic idea here is that you got a stock in a real nice uptrend, and they're not always as clean as this, obviously. But the thing about Hershey, and if you go to like if you go over here to the pending trades, and this is what you want to pay attention to, like because this is only displayed, it's only displayed for the pending and when they trigger in, right? And so you got a 2% average range, which means it's a really tame stock, basically. I mean, that's what big cap big cap brand name stocks. A lot of times, you're something like Hershey or even like a REIT or something like that, or a utility or whatever. The average range is a couple of percent. And so anything with like, anything in the twos is a pretty tame stock. There you go, Costco setting up again. Costco's actually getting ready to come out with earnings, and so we'll have to see about that. Earnings are next week. If Mastercard. I mean, there's Starbucks, but and then you got here's a biotech stock, this ARWR. Let's take a look at that. And so you could choose if you like. Um, and so the ARWR is it's sort of on the downswing here. And so here's what happens is, and you probably noticed this too. You get this when the stock shows up on the pending list. Typically, like the trigger's like way above, starts off like way above the current price. Like maybe and I'm not sure where it showed up, but like, and so what happens is it comes down and comes down and comes down, and then the idea, and this doesn't always happen, but this is a pretty good example, right? Like this prior trade over here. The stock's in an uptrend, pulls back, and then it comes down, and it's a little bit different here, but you want to see it like consolidate and form a bunch of sort of narrow range days, and then that trigger will sort of meet the price. The idea is it's intended to meet the price right at the consolidation point where you get some narrow range days and then go back on the upswing. So that's sort of the principle behind it. Now it doesn't always play out that way, obviously, right? Like sometimes you get like a big sell off and then maybe a pivot low, or maybe just a day like this, and then it just turns right back around and rips higher. And in those cases, that's why sometimes it seems like that the stock's already kind of made a significant move before it triggers in, but that's just sort of the nature of the market. I mean, stocks are going to behave in different ways at different times, and you just don't know what they're going to do. But ideally, ideally, you get something like this. You get a sell-off. This wasn't much of a sell-off, but at the time, I'm sure that was pretty dramatic. But you get this narrow range price action, right? Like if this stock spent the next few days just like really sort of tightening up into a narrow range, and then started to turn up. So let me see. What was the just out of curiosity? It says the trigger's 30 on this right now. And so there you go. The trigger is still like sort of way up here. If we were to get some narrow range consolidation for, a few days or a week or whatever, um, it may come down to, right around here or something, consolidate a little, and then it starts to turn back up and then triggers in, right? So it just all depends. But anyway, so that's sort of the nature of it. And then you got something like Roku, right? So Roku, big. This was on the list, and then it got dropped, right? I mean, it sold off, and then I saw it on the pending list, and then it came off. Just the characteristics of this particular sell-off. Now anything could happen, right? I mean, obviously you could look at this chart and this stock could be traded, but it's no longer on the pending list. So we have rules, and the rules dropped it off the list, basically. After at this point here. And so, no longer on the list. That doesn't mean it can't show back up at some point. My guess is for Roku to like come back to, to come back to being on the pending list, it would have to have like another big sort of rally and a pullback or whatever. So, anyhow, let's look at the moving averages on this just for the fun of it. So, yeah, there's the 50-day moving average. I have a 9 EMA on here, so it's actually got some potential for just like sort of a dead cat bounce rally, but that's not really what we're looking for. What we're looking for is like stocks that to have a reasonable sort of pullback and then resume the upswing. I think Hershey's probably a great example of that, right? I mean, that's what you call a nice uptrend and then a pullback, right? Beautiful pullback in the context of, a really nice uptrend, and then the trend, tries to resume. Like that's what's happening here is Hershey pulled back, and then there's a little pivot low there, and then now it's looking at a potential trend resumption, kind of like what happened back here. This is a little bit different. It was more of like a sideways consolidation, then a little dip, and then the trend resumed, and it never looked back. So it's got a pretty good look to it. I'll bet the weekly chart on this. Look at that. The weekly chart's a little bit a little weird because that was a pretty big long range sell off there. Huh, interesting. Interesting, interesting. Anyway, so that's sort of the nature, I guess, the nature of the how the system behaves and what you can expect. But I think Hershey's probably a really super good example of how it works. So anyhow, let's see. There's a couple more. Whoops. HOLX. I accidentally typed that in. Yeah, here's another one. This one's kind of struggling a little bit. Not doing a whole lot here, but it's still a decent looking chart, I suppose. Zoom out a little bit further here. Yeah, this is kind of, it has a lot of big ups and downs, but kind of a sideways, kind of a sideways consolidation here, but look at where that stop is. I mean, that stop is 20 cents away from the trigger price, and it's just in like sort of the right spot here where, if this thing doesn't make a move, then it's just gonna, tomorrow or whatever. Looks like today it's kind of holding its own, right? But tomorrow, if this doesn't get any upward momentum, then it's just going to get, taken out. So, fairly close to break even, which is no big deal. And so that's why when we go through like these rough patches in the overall market, you'll see stocks that hopefully they hit the stops after enough time has gone by for the stop to trail up. And so, few percent here, a few percent there, no big deal. But the idea is that, we're trying to cut the loser short and stay with the winners, right? So that's the whole idea of it. Anyhow, overall market, let's see, S&P's up 6 here, and it feels kind of like, it feels like the market wants to feels like the market sort of wants to sell off, but it's managing to hold its own. Yesterday was kind of a little bit of a watershed day because we hadn't seen like a big long range sort of sell off day yet. And another thing, here's what I'm watching is there's a gap. There's like, and you can see a little bit better on the The problem with the SPY is that with the quadruple witching or whatever, it's that dividend came out. It's kind of skewed it, but My opinion, there's a gap there that, probably it probably wouldn't be a bad thing for the market to sort of fill that gap, right? This, and I forget what this was. This was sort of like this particular day here. It was on 9-5. You got sort of a breakaway gap there, and so probably needs to do a little bit of work in there. Yeah, this just looking at this daily chart here, today is kind of one of those days where you sort of, retrace back up into yesterday, but there's a lot of overhead resistance that's built up now. And so you can draw sort of down a trend line across the highs here. That's going to act as overhead resistance going forward. You could draw another trend line sort of across these couple of highs, the highs from the past week or so. And so yeah, I mean there's a lot of overhead resistance here, and there's a lot of crazy stuff going on out there in the market. And the other thing, I was going to get to this earlier. Like, I wanted to talk about this earlier, but I just happened to look over at CNBC and they're talking about FANG stocks. And so earlier I was talking about sort of divergences in the overall market, and just a quick look at the FANG stocks. And by the way, look at this trade in Facebook, right? And then for whatever reason, like, Facebook is the system hasn't picked it up yet for as a candidate for another trade. But boy, this was a beauty. Back in the summer here, spring, June, that was just and it got closed ahead of earnings. And so we're going to be looking at a few weeks from now. We're going to be looking at earnings season again. But anyways, I mean, look at these FANG stocks, looking a little bit rough here. Facebook, what was it, Amazon? Look at Amazon. Amazon, that's a pretty significant sell off. Pretty significant sell off in Amazon. And Netflix, man, Netflix just, Netflix looking really rough here, right? And it's a huge sell off. So, and then of course Google, Google looking pretty good actually. Google's still, pretty close to its all-time high. So, but you start to see like some of these FANG stocks sell off like that, then that's just another sort of like a little bit of a yellow flag, I would say. So anyway, anyways, let me cut this. Let me cut the show off here because I've been talking for I typically like to go 45 minutes an hour, but I've gone over an hour this time. So anyway, it is what it is, and each week I just kind of wing it. One of these times we'll get Jeffrey on here and we'll go back to basics or whatever. But yeah, I just wanted to sort of take a look around at some of the open trades here, see what they look like. Apple's still hanging on there. So, hey, have a good week, and I will see you guys back here next Wednesday.